Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Quietly lower, I think, would best describe a trade across the ag space overnight. Bean oil would be the exception to this, currently trading 40 points better. Beans, they've backed off 7 to 11 cents. Meal is $6 to $7 lower, while feed grains, corn down 2 to 3 cents at or near session lows, while wheat prices also backing up 2 to 3 lower in Minneapolis, 7 to 8 cents lower in both Chicago and in Kansas City. Fresh news or evidence of a Chinese buying of U.S. soybeans is difficult, if not impossible, to uncover. I think that alone is probably good enough a reason for the price pullback. U.S. soybean FOB offers remain slightly above those from Brazil for both December and January. You get out into the February timeframe, deeper into the Brazilian harvest, their offers fall to nearly $1 below those from the U.S., and this is even before we factor in the 10% tariff differential. As it stands, I would not expect to see significant Chinese buying of U.S. soybeans. U.S. corn, however, remains competitively priced into the late winter months, which should continue to drive a solid U.S. export program. No export sales today, again, with the USDA shut down, federal government shut down for a record 37th day. Yesterday's EIA report showed a record amount of ethanol produced last week. At 330 million bushels, it was up from 321 the previous week, and consumed roughly 112 million bushels of corn, well above the pace needed to hit the USDA forecast for the 25-26 marketing year of 5.6 billion bushels. Don't be surprised if we see an upward revision to this forecast in next Friday's WASDE update. Yesterday, the Supreme Court heard arguments over the legality of Trump administration's use of tariffs. If the court rules against the Trump administration with a lower appellate court deeming these tariffs are illegal, the U.S. Treasury may be forced to pay back nearly $100 billion so far collected, and also remove a key source of funding for the Trump administration's planned financial aid package for U.S. farmers hurt by the U.S.-Chinese trade war. Expect to see updates from Argentina this afternoon from the Buenos Aires Grain Exchange. Farmers down there have just begun planting their soybean crop. D's corn continues to hover in and around this 430 level. Selling seems to dry up every time we dip under 430. However, so far we have not been able to drive above last week's high at 437. Funds bought another 12,000 contracts of corn yesterday, cutting their short position down to what we've got it at 55,000 contracts. Probably need to see a significant cut in U.S. corn production next week to drive stocks below 2 billion and perhaps see prices work up into that 450 range. Inside trade for Jan beans overnight after reaching a 16-month high yesterday. Funds there continued to buy beans, another 9,000 yesterday, taking that long position over 100,000, biggest since July of 23. I think it would be difficult to rally prices much further without evidence of a much larger Chinese buying, but who knows? Maybe speculative traders continue to see value in owning commodities now that U.S. and China are on friendlier terms and the U.S. Fed is in easing mode. Diesel oil challenging 50-day moving average at 50.39. Inside trade for diesel meal, as it's pretty much been chopping between 315 and 325 all week. The surge in U.S. meal prices has left U.S. uncompetitive in the global marketplace. Wheat also benefiting from fund short covering, particularly after some word of Chinese small purchase of Chinese for U.S. wheat. I also think index funds have also been active buyers in the ag space since the government shutdown, which I think is evident by Chicago and Kansas City, both outperforming Minneapolis as they do not allocate to the Minneapolis futures contract to the index funds. Goldman roll begins tomorrow. Thanks for listening, everyone. Have a great day.